Hi friends, welcome back. So it seems that we have a major bank problem on our hands. Let's go through some headlines. I'll share my thoughts and get yours as well. Headline: New York Community Bank's credit grade is cut to junk by Moody's. And it says here, Moody's cuts regional bank 2 notches to Baa2 amid stock rout, which we're going to go over in a moment here. Moreover, New York Community Bank extends 4.5 billion stock rout to lowest level since 1997. I was actually looking at the chart here. So it's down about 87.29% from the all-time high. In the after hours, it's down 15% because the news got out. But it had a horrible day today, down 22% plus another 15. And then you can just see here, this is the 5-year chart. It's just fallen off a cliff. Doesn't look good. Moreover, this was another headline. New York Community Bank Corp Chief Risk Officer left weeks before big loss. Okay, so yeah, your risk officer's leaving, and if anyone's going to know what's going on, it's going to be that person, right? And it reminds me of what happened at Tesla. This was back in August, where headlines was Tesla is losing its master of coin. Essentially, their chief financial officer, Zachary Kirkhorn, left after 13 years. He's like, you know what? I'm going to take my $590 million and get the heck out of Dodge. It's may or may not be a similar situation here. Who knows with New York Community Bank? Let's look at some more details of this thing and go over it. So it says the rating company downgraded New York Community Bank Corp long-term issuer by rating 2 levels to Baa2, citing unanticipated losses. So that means surprise, and surprise in a bad way. You know, we want to get unanticipated, gains or returns, not losses. So it's not a good thing. And it says here, we're talking about multifamily properties and essentially pressure on earnings and decline in capitalization. It also says here, this is sort of what the bank may need to do. It may need to sell $4 billion to $6 billion of additional debt over time to meet the new bank regional debt requirements. So who's going to buy this stuff? That's the key, right? And is this systemic? Do other banks have the money to bail them out? Maybe. We'll find out. Is the government going to jump in? Maybe. They're saying here, companies cut to junk by 2 credit graders are known as fallen angels, and have their debt moved to high yield indexes. And this is the key, which can limit certain money managers from holding securities. So you maybe have difficulty selling these things. The other thing is, I was looking at sort of the ranking, like what's the size of this bank compared to others. So if you don't know, JP Morgan Chase is our biggest bank. You're talking like 3-4 trillion. Then Bank of America, Citibank, Citigroup, and then Wells Fargo, Goldman Sachs, Morgan Stanley. But when you're talking about New York Community, we're actually talking about the 34th largest bank. So it's not, small. It's over 100 billion in assets under management. And it got bigger because it bought stuff during the bank collapse last year. Now, again, we were talking about, what was it? Baa2, I believe was the level. Let me just check that, make sure we got the right one here. Yes, Baa2. So I was looking at this here. Baa2 is here. So that's non-investment grade. This is coming from Moody's. And the way you think about this stuff is you have your investment grade and then you have your speculative. Moody's says non-investment, you can call it speculative. Baa2 is right here. So one definition by long-term is judged to have speculative elements and significant credit risk. And another thing I want to bring up too, if you are in, this bank, it is actually bigger than just New York Community, meaning that they go under different brand names as well, depending on which state you're in. So it says here they have 395 branches. So New York, Michigan, New Jersey, Ohio, Florida, Arizona, and Wisconsin. So the names of these things, just want to make sure you guys know, and your neck would be interesting if anyone's, run into the bank, that kind of thing. Branches are operated under, so the names are Queens County Savings Bank, Roslyn Savings Bank, Richmond County Savings Bank, Roosevelt Savings Bank, Atlantic Bank in New York, Garden State Community Bank in New Jersey, and Ohio Savings Bank in Ohio, and then AmTrust Bank in Arizona and Florida. So again, it's 395 branches. I was looking at this too, of like how they talk about this stuff. So if we start to get to the lower levels, right now I guess we're at C, or is it B and C kind of level? Banks rated as B possess strong intrinsic financial strength. Typically, they will be institutions with valuable and defensible business franchises, good financial fundamentals, and predictable and stable operating environments. So I mean, if we're at the B, although they're saying this is junk, I never know what to make of this Moody stuff, to be honest, guys, because let's be real. During the great financial crisis, they were fined after it, unfortunately, too late that it was discovered because they were kind of cooking the books in a way. But they were fined $864 million. So, can we trust what they say now? Who knows? I mean, honestly, who knows? Obviously, after that situation, everyone's kind of nervous, of course. The issue is with these kind of things is when the money's easy, the money's flowing. Many people will essentially lever themselves to the hilt, and then if their calculations are off in the situation of commercial real estate, which not necessarily something that anyone could have foreseen, was the pandemic, where people aren't going to the office, and then everyone's staying at home, and they was like, you know what, I'm just going to work on Zoom, and then these people who invested in commercial real estate can't find any renters. Moreover, if you have startups failing or companies failing, it's not that they don't want to pay you, they just don't have any money, and the wheels start to come off. So we'll see if this is widespread or not. Now, everything that I read, they're trying to convince you that it's not. Because supposedly it's really more of a regional thing, not necessarily the bigger banks. So I showed you guys, and I also showed you the size. If we were having problems with, say, JP Morgan or Morgan Stanley, that would be definitely a big concern. The issue, though, however, and I want to bring this up, is that it is connected to other countries. We saw there was I want to say it was a bank in Switzerland and then one in Japan that was connected to the stuff happening in the USA regarding commercial. And then we've also been following the story in China, which is even bigger, and that is a really serious problem. So it's commercial, residential, and all kinds of stuff. And their market's been crashing over there. If you guys haven't been following this, this was just the headlines come out today. It says and it's President Xi discussed China stocks with regulators as rescue bets build. So people are hoping that the meetings are going to give some sort of stimulus or something like that. But how is the government bailing out the market or the real estate sector or whatever they're going to decide to do? Like there's systemic problems that you still have to worry about, right? Just printing money or whatever. Like, how does that fix the overall problem? Like for example, we talked about this a couple days ago, where they took a bunch of small banks, talking about in China here, and then just reformed them into new banks. So, but the bad debt's still there, and that's the issue. Like, say with New York Community Bank, where it said they have to sell 4 to 6 billion of was it here? Yeah, they need to sell 4 to 6 billion of additional debt. So who's going to buy it? Someone's going to be taking a big loss on this stuff, I think. Now, there are going to be people trying to take advantage of this commercial real estate situation. There was an article that just came out today. Also, if you guys remember Adam Newman, he's the WeWork dude, and he's a big scammer if you don't know. But he's teaming up with this, I guess, a fund called Third Point. And they've been, thinking, hey, I want to try to rebuy WeWork, which is really interesting. Because my understanding is WeWork went into bankruptcy, and you still actually see WeWork's in operation, but it's going to depend on where you are, and it's going to depend if you're U.S. or international. So they're operating differently. And I know we have some people in the community that work at a WeWork, so you guys can let me know in the update if you're still going to the office or not. So yes, when things crash, yes, if you have capital, yes, there might be some opportunity there, but can you trust a guy like this? And what was interesting, I guess, Third Point, the one who's mentioned in this article, they were like saying, well, we're just in early talks and no comment. So the Adam Newman guy was who knows? We don't know. It's a he said, she said. So who knows? I'm sure he is trying to explore, get it back, but it's like, can you trust this guy? Who knows? The other thing too, which I want to mention to you guys as well. This came out recently, so this was just February 6th, right? So just yesterday. Headline: Credit card delinquencies surged in 2023, indicating financial stress, and that's from the New York Fed. I have a chart here that's showing this is essentially when loans start to go bad. I think it's when you say something like seriously delinquent, I think it's like 90 days, haven't paid, something like that. But basically, it's increasing, right? You can see right here. So the credit cards are at 8.5%, are not good. The auto loans are at 7.7%, not good. You can see it's going up. Now, are we at crazy levels? Not quite yet. Back in the great financial crisis, credit card delinquencies, or I think that's the right word. Is it bad? I think it's, credit card delinquencies. Yeah. I think that's what we're looking at here. It says, oh, actually, I take that back. It says shares of balances where payments are at least 30 days late. So sorry about that. I want to make sure I get these things right. But anyway, the credit card problems were over double digits, right? So you're approaching like 13, 14%. So like I said, we're heading that direction, but not quite there yet. On the auto loan situation, though, I think this is a real problem, though. Well, I mean, it's all a real problem, of course, but we had talked about this before, because the situation with the cars is that the car prices had really spiked the last couple of years, and then some people might have, gotten their car on the variable loan, and so then you have a couple problems. Is that car prices spike, now car prices are down, and then they're underwater on their loan, and they can't even sell their car for what they got it, what they paid for it. So it's a real problem. That's something that happened in the subprime crisis with mortgages. But I don't, auto loans is smaller in sense of like, it's not that big of a not that big of a loan compared to the house. Like usually a house is going to be like 10 to 15 times more than your car. Although to be fair, with the Cybertruck these days, maybe it's only 5 times more than your house, or 6 times, or whatever, depending on the price of your house. So that's what's going on in the market. I do follow this story. This is something that we definitely had talked about and predicted that this would be a problem. You can see it happening. We talked about before, there was a one billionaire that was into this stuff. I think he was like the CEO of Starwood. He was saying there's $1 trillion that's probably going to be wiped out. We'll see if it ends up being that big. It's a real problem, and I think a lot of these people who are holding these things need to either renegotiate, but no one really wants to, right? Because like, what do you do with that? And I believe that a lot of these things that we come due like 2024, 2025. So we still have a little bit of leeway, but we can all see it coming. So I'd love to hear your thoughts on this thing, and do appreciate your time, and I'll catch you next video.